Hello, very good morning to all and happy Friday. Welcome back to Daily Dose of Market Insights. I'm Kelvin here. Happy Friday, good morning. Today will be the 30th of May 2025. So before we kickstart today's gist of the Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast prediction or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the short-term intraday technical outlook on the major US dollar pair, the major stock indices, pardon me, and the two key commodities market that we cover on a daily basis, i.e. gold XAU/USD and as well as West Texas crude oil. Let's have a recap what has taken shape yesterday in terms of the news flow, economic data release, as well as their impact on the various intraday movement on these broad-based cross asset classes, and as well as I want to cover one key economic data pertaining to the yen, the dollar yen, that has been released early today's Asia session at the 8 a.m. hour mark. All right, so let's have a recap what has taken shape yesterday in terms of the FX dollar movement over here. So if we were to give me a minute now, let me open up my chart. Yeah, so that you guys could see. Yes, so on my screen over here, what you could see is that this is the 5-day rolling performance of the US dollar against other major currency as of 30th of May. So what you could see over here is that at the start of this week, the dollar strengthened. Then after that, the dollar strength starts to trend down. All right, over here, as you could see. So at this point in time, in today's Asia session, the dollar is strengthening against the Aussie. There's no particular catalyst news flow that is pushing up. It's more like a technical short-term intraday movement. And nevertheless, the Aussie dollar is still continues to track below that 200-day moving average, which is at the 64.50 level mark. All right, so later I'll touch on the short-term intraday technical outlook on the Aussie dollar. So net overall is a bit of a choppy price movement as we are seeing right now in the Asia session on the dollar major pair. But nevertheless, what you could see is that since the dollar strength hit a intraday high on Thursday, which is yesterday, and the dollar strength starts to dwindle off as the European section kickstart yesterday over here. So those who record my short-term intraday technical outlook yesterday, we flipped back to a dollar bearish buyer stance, indicating that prior 2 days of dollar strength movement that is being seen at the start of this week is more of a corrective rebound phase. All right, so why do I mean by that? So if you look at the dollar index, it's still trading within a medium-term trend. All right, since the high of 13th of January this year. All right, as price action can't break above the 50-day moving average. And what's interesting is that yesterday price movement of a very long bearish candle, which is down by negative 0.54%, has reintegrated back below the 20-day moving average. All right, so usually after this very strong back candle in terms of technical analysis perspective, there tends to be a knee-jerk intraday rebound movement, all right, over here on the dollar index. So that should explain to us why there's a bit of consolidation that is being taking shape in today's Asia session, where the dollar start to see a bit of a short-term intraday rebound as we are speaking right now, after yesterday's yesterday's long bearish Marubozu candlesticks. In terms of technical analysis perspective, there tends to be a short-term intraday rebound whenever this very long bearish candlestick appears on a higher time frame. But nevertheless, it still indicated to us that on the medium-term perspective, the multi-month to multi-week movement is still on the bearish side of the story in terms of the dollar index. So we know that the dollar index represents a broad base of US dollar currency, a broad base of currency, where it tends to measure the general weakness or strength of the dollar. So if the dollar's index is inching downwards, it means that in general, we are still witnessing dollar weakness, not dollar strength over here. All right. So yes, there could be some form of intraday, we call it rebound movement. Like I say, like what is taking place right now. So later I'll highlight what are the key levels to watch on the euro dollar, the sterling dollar, and as well as the dollar yen and the Aussie dollar. All right, when I cover the second segment of today's daily dose, and the primary driver about this dollar weakness coming back into the picture was yesterday. We know that Trump's, okay, give me a minute. Where was it? Where's the news? Yeah, this. All right. So we know that prior to yesterday on Wednesday, there's this U.S. court that is in charge of international trading affairs ruled that Trump tariffs, U.S. President Trump tariffs as illegal, and they actually paused the implementation. And Trump's U.S. White House admin, which is Trump administration, filed in an appeal stating that they are not in favor with the U.S. trade courts that deem Trump tariffs as illegal. And yesterday, there's this appeal court. No, it's not a Supreme Court. So an appeal court stating that, okay, give me a minute, let me highlight. Yeah, so it's a federal appeals court temporarily paused a sweeping ruling against President Trump's global tariff while it takes more time to consider the administration request for a longer lasting hold over here. That means, i.e., now Trump's we call it administration is now filing in a formal appeal against this U.S. trade court ruling that deems Trump's global tariffs as illegal. Then yesterday, there's this federal appeals court. It's not the Supreme Court. So the federal appeal court temporarily paused this ruling that is against Trump's global tariff. That means allowed the global tariffs to be implemented at this point in time to take effect. But the final verdict still lies on the U.S. Court of still lies on the Supreme Court, okay, which is till to date has not actually decided yet, or have not been formally debated whether Trump's global tariffs is deemed illegal or not. And because of this pause by the Federal Appeals Court that allows Trump global tariffs to remains kind of in effect, that causes the dollar strength to actually weaken. Still recall that over here is that because of the way the current US administration is implementing this kind of haphazard way of various trade tariff policy, and that created a lot of dissatisfaction among the global investors towards US assets over here, and the dollar weakened as a result in the last few months ever since this different tier of US global tariffs is being rolled out in February, March, and April this year. All right, and also due to this, we call it situation that Trump is facing right now in terms of challenging the technical legality of whether his current global tariffs policy is able to be fully implemented with confidence from a legal perspective. Trump administration now is exploring a different kind of tariff again that they deem that is within the US president executive power. So in today's Asia session, Trump administration is considering allow tariffs up to 15% for 150 days. All right. So meanwhile, there could be a pause, but they're now exploring different kind of we call it getaway with this technical legality that is being imposed by the U.S. Trade courts over here. We know that there's a base tariff of 10%, higher reciprocal tariff. So this 10% is still in fact in force, given the fact that there is a pause, 90-day pause on the higher reciprocal tariffs that will end on 9th of July for most countries, except for China, it will stretch out to August. And the base tariff of 10%, Trump's want to actually raise it to 15%, at least for 150 days. So these are they are exploring another kind of we put it in a way that another kind of implementation that may not fall within that legal boundary. All right, that the trading, the US, one of the US trade courts deem it as illegal initially. And because of this, it created the dollar strength coming back, a dollar weakness, dollar strength reversal, i.e. dollar weakness coming back into the FX market. And also because of this this consideration of 50% tariff, a higher level for 150 days, that also causes a negative feedback loop on the Asia stock market right now as I'm speaking, where the Nikkei 225 is down by negative 1.41%. The Hang Seng is down by negative 1.4%. The Hang Seng Tech is down by negative 2.5%. And the other Asia market also also in the red right now. Kospi is down by negative 0.6%. The Taiwan TAIEX is almost unchanged. The STI is down by negative 0.25%, and the ASX 200 almost unchanged at 0.09%. So a bit of uncertainty that is now sweeping into the global markets. But what's interesting over here is that if you look at gold price is not actually rallying right now. All right, so gold price is in fact down by negative 0.5% at the 3,300 level. So later I'll explain to you why gold price is not able to actually do a breakout, because from a technical perspective, yesterday it got rejected at a key near-term resistance level at 3,328, which I highlighted yesterday, that this level got to be an important level that the bulls got to surpass to gain traction, potentially that you could see further upside pressure. So later I'll touch on the intraday technical outlook on the gold chart, where I will highlight that element more clearly to you guys over here. And because of this, we call it global fear of this 50% higher base tariff of 50% that Trump may want to consider for 150 days, that also causes oil to actually slide as well. So for oil price is rather weak in today's Asia session. So if you look at oil price right now as we are speaking, there are actually West Texas crude oil is down by negative 0.4% after extending yesterday's decline, where it staged that bearish reaction right exactly at that so-called 50 day moving average that is acting as a key short-term pivotal resistance at around the 64 level per barrel. So later I'll touch on the West Texas crude oil technical outlook chart on today's intraday perspective. And as for yesterday movement on the US stock market, so US stock market so far has been, yesterday was rather rosy. It's not say rosy, I would say that rather positively lukewarm, riding on the cocktails of Nvidia stellar rallied during the close, after the close of Wednesday's US session. So all the major US stock indices managed to close slightly in the green, where the SPX is up by 0.4%, the Nasdaq is up 0.2%, Dow Jones 0.228%, and the Russell 2000 up 0.34%. But however, due to that 150 days, we call it this 150 days, this 150 days new tariff plan by Trump for 15%. That means increase the base rate up to 5% to 15% for 150 days. Create a bit of pullback on the major US stock indices, where the E-mini S&P and the the S&P E-mini futures and the Nasdaq 100 E-mini futures both are down by negative 0.2%. Not a really a major sell-off, but I would say it's more like a pullback over here to certain key resistance level when I touch on the chart on the Wall Street 30 and the Nasdaq 100. So one more news flow and share is more pertaining to the dollar yen over here. So in today's Asia session, there's this release of key tier 1 Japanese data, where we start to see the core CPI, Tokyo core CPI. Why Tokyo is very important? Because Tokyo is always used as a leading city for its gauge of the Japan nationwide inflationary trend. So market participant will be tends to closely watch the Tokyo inflation numbers. So Tokyo inflation number from a core CPI perspective rose to a 2-year high and is more than 1 basis point slightly above expectation. Market is expecting 3.5%. It rose by 3.6% and is also above 3.4% that was printed in the previous month of April. So this core CPI inflation trend very clearly is indicating that Japan right now is now in the Japanese inflationary trend is moving in line as attended what BOJ wants, means what Bank of Japan wants, in order for them to slowly normalize their prior decade plus of dovish, ultra dovish monetary policy. That means it supports Bank of Japan's intention to slowly and gradually increase interest rate in Japan. All right. So if you look at it, it's actually 3.6% year over year for the core CPI is actually close to a 2-year high. And if we were to strip out the energy prices, that means what we have over here is a core CPI. That means much lesser volatile items. Will be Tokyo core CPI, which is excluding food and energy. That also rose up by 1 basis point to 2.1% from 2% over here. So if you look at the core basis level, it's also slowly recovering over here, but not of a less of a steeper pace compared to the core. 2.1 at 2.1% is the highest almost in a year, and it's also back to above that 2% general target that BOJ has for the nationwide Japan core CPI inflation level. So we know that since Tokyo it tends to be leading, and if the Tokyo core CPI managed to inch back up above the 2%, highly chance that the nationwide Japan core CPI will continue to drift upwards above the 2% target mark where BOJ set as well. So that actually kind of supports this ongoing yen strength against the dollar. So what you could see over here is that after the initial spike up in the first 2 days of this week, the dollar yen starts to dwindle downwards as expected yesterday, where we will flip back to a bearish bias for the dollar yen technical outlook. That means anticipating further yen strength coming back to picture as the dollar yen rate continues now breaking below the 145 figure level, and that is being supported by today's better than expected Tokyo inflationary trend data for May. All right, and one more news point to highlight is more important to the global markets is where US Federal Reserve Chairman has been specially invited to a one-on-one meeting with President Trump yesterday. So during this meeting, it was reported by the White House and as well as released by the PR department of the US Federal Reserve Board. Over here is that he stated that President Donald Trump pushed Fed Chair Powell to lower interest rate at their first meeting since the president inauguration this year. And Trump told Powell that by not lowering rates is putting the US at an economic disadvantage to China and other countries. And Powell stressed that the path of policy will be dependent on incoming economic information. That means still the stance of data dependent. So despite that, seems to us that now US President Trump is now putting a lot of pressure on the Fed to keep on pressuring them to lower interest rate. But markets still do not think that Fed Chair Powell might be swayed into after yesterday's meeting. Why do I say that? By looking at the CME Fed Watch tool. So for those who follow my market, those of Daily Insight, I'll be using this CME Fed Watch tool to have a gauge what market participants in the Fed Funds futures market are thinking ahead after the release of various relevant events or economic data that could shape Federal Reserve monetary policy in the months to come. So we know that the next month meeting will be on the 18th of July, where they also release the new dot plot where Federal Reserve official will put in their forecast of where the Fed funds rate, inflation trend, and GDP growth in US were to be. So far, market participants in the Fed funds futures market do not think Powell will sway to Trump's pressure after that one-to-one meeting yesterday by assigning almost 100% probability at 97.8% that the Fed funds rate will remain unchanged on the 18th of June FOMC meeting. So because the current rate is 4.25% to 4.5%, high probability of 97.8% it will remain the same at 4.25% to 4.5%. Only a 2.2% chance they are pricing in a 25 basis point cut. And if you look down the curve over here by looking at the aggregated tab, where they also where the Fed funds, CME Fed funds too, able to plot in the probability of future other months down the road of FOMC meeting. So if you look at the probability over here, okay, so even after 18th of June meeting, The next meeting will be 30th of July. Market also assigning a rather high odds that the Fed funds rate will remain unchanged at 4.25% to 4.5% on the 30th of July meeting, 77.8. Only 22% chance of a 25 basis point cut. And the first cut for this year potentially may come in on the 17th of September meeting, where market is assigning it a 78.9% chance that the Fed funds rate will be at 4% to 4.25%. So that's a potential reduction of 25 basis point cut. And if you look at down the road, by the end of this year, which is the last meeting on 10th of December 2025, the market is expecting the Fed funds rate to be at 3.75% to 4%. At a rather high chance of 99%. So what market is assigning the probability right now is that potentially there could be 2 interest rate cut before 2025 ends. So this is what it implies right now at this moment. So this potential 2 interest rate cut of 25 basis point each is almost the same as a month ago. All right. So yesterday's one-on-one meeting with Fed Chair and US President Trump does not really move the needle that much in terms of the Fed funds market participants' expectation on the future Federal Reserve monetary policy decision. Right. So as new data come in, I will continue to monitor this CME Fed Watch tool, and if there's any interesting, I will share with you guys in our usual daily dose of market insights. All right. So with that, that ends the first session of today's daily dose. Let us now jump into the second session, which is the intraday technical outlook. All right. So before we do that, let me expand my screen. Okay, good. So let us start with the FX market. All right. So starting with the euro dollar. So euro dollar, as expected, it rallied, hit our resistance level in our bullish bias that we have yesterday, 1.1375. The RSI at the overbought, and now trying to exit, has really exited from the overbought level. All right. So potentially right now there could be a minor pullback that is taking shape potentially that could take shape in the European session, and we also start to see from the low of 29th of May all the way up to today's Asia session intraday high, which is 1390, 1.1390. There could be, we could see a minor 5-wave up sequence, wave 1, wave 2, wave 3, wave 4, wave 5. All right. So after a minor 5-wave, there could be a retracement of 38% to 61.8%. So I do it over here. So the 61.8% lines exactly at the 20-day moving average, and also this congestion area over here of yesterday minor congestion area of 29th of May, which is at 1.1270. So 1.1270. So 1.1270 will be my adjusted pivotal support level for today. All right, given its key elements, where it's a 61.8% Fibo retracement of a minor 5-wave up sequence, congestion coincidentally linking it directly to the 20-day moving average as well. And let me draw another highlight over here. Okay, so there's this congestion here. All right. So the first support level to watch will be at 113 figure level. Maximum level for that pullback to take shape, 112.70. If 112.70 tightened and adjusted short-term pivotal support holds, which is the 20-day moving average, we will still maintain our intraday trend bullish bias on euro dollar. Above 113.75 sees 114.25 next on the intraday basis, which is close to the minor swing high of this Monday, 26th of May, and coinciding with the minor swing high of 23rd of April and 29th of April this year. However, if price action starts to shape a deeper slide beyond below 1.1270, today's intraday bullish bias will be invalidated to trigger off a deeper corrective pullback, exposing 1.1220, which is the V-shaped recovery that's being seen on yesterday during the start of the Asia session. Below it exposes 111.65, which is close to the rising 50-day moving average over here. So that's for the euro dollar. Next up will be the sterling dollar over here. So the sterling dollar, as we could see, it's now also hit our first resistance level 1.3520 over here, 1.3520. So potentially there could be a minor pullback taking shape as well. So as long as this minor pullback didn't break above our V-shaped recovery, minor V-shaped recovery low of yesterday's start of the yesterday's Asia session, which is now my Titan adjusted upward pivotal support at 134.20. We'll still maintain our intraday trend bullish bias for the sterling dollar. Above 135.20 sees 135.55 next on the intraday basis. Only an hourly close and a push down below 134.20 that would negate today's intraday bullish bias to see a minor corrective pullback sequence, retesting the rising 20-day moving average. Now I think now is a next near-term support at 133.70. Only a breakdown below 133.70 may trigger off a deeper corrective pullback to expose 133.10 and even 132.60, which is the 61.8% and the 76.4% Fibo retracement of that previous minor uptrend phase from the low of 12th of May all the way up to 26th of May this Monday. Right, so that's for the sterling dollar, still maintaining our intraday trend bullish bias with a slightly adjusted upward short-term pivotal support level at 134.20. Next up will be the Aussie dollar. So the Aussie dollar yesterday, we flipped to a neutrality stance below 64.55 and 63.90. Indeed, it starts to continue to trade between this sideways range. In yesterday's US session, it attempted to break above 64.55, which is the 200-day moving average, come break and shape that intraday sell-off. And in today's Asia session, again, it has another second attempt, but come break and shape a bearish reaction of it as well as we are speaking. So indeed, this 64.55 seems to be a stubborn resistance, at least on the intraday basis, based on the current price movement. So no change. I do expect it to be continue to be congested within this tight range for today, given that now is Friday and potentially market players may not want to take aggressive directional bets on the Aussie dollar. So we will still maintain our intraday neutrality stance for today with the same levels to watch. 64.55 for sure on the upside. On the bottom side will be 63.90, which is this minor swing low area that previously kept the downside of the Aussie dollar since 15th of May. Right, only a clear bullish breakout of hourly close above 64.55, then that potentially could see a test on the next intermediate resistance at 64.90 next on the Aussie dollar for today. All right, so maintaining our intraday neutrality stance between 64.55 and 63.90. Next up, dollar yen. All right, so dollar yen plummeted as expected, reintegrate back below the 50-day moving average and the 20-day moving average over here. RSI now coming very close to the oversold level, but there is no sign of a bullish divergence at all. All right, over here, price action going to shape lower low, in line with the price action, that the raw price action being seen on the price move of the dollar yen. All right, over here. So perhaps potentially there could be some form of a minor pullback taking shape. So minor, we call it dead cat bounce, or minor mean reversion rebound, resistance level to watch 144.25, maximum 144.85, which is correspond to the 20-day moving average, I think, as a similar resistance level as well. And if you do the Fibo retracement of this current slide that's taken shape since the intraday high on yesterday's Asia session, Thursday Asia session, all the way down to today's intraday low at the moment, that confluence with the 50% Fibo retracement. So using a Titan short-term pivotal resistance downwards today at the 144.85 level, that confluence with the 20-day moving average as well, we will still maintain our intraday trend bearish bias for the dollar yen. Next support level to watch will be 142.35 after hitting the 144.10 level, which is our support level that we have yesterday. Below 142.35 may see a slight drift downwards towards 141.65 next, which is the minor swing low area of 23rd of April. Only a sudden push up and a bullish close with hourly close above 144.85, then that would invalidate today's intraday bullish bias sorry, okay, that will invalidate today's intraday bearish bias. Okay, let me highlight again. Okay, so this level here, and see the price action retesting yesterday's swing high area of 14610. All right, 14610 over here. All right, a squeeze up to see a test of 14610. So I repeat again, using a tightened short-term pivotal resistance level for today at 144.85, but notwithstanding there could be a minor bounce 144.25, maximum around this, below this, slightly below the 144.85 area. But as long as this 144.85 tightened short-term pivotal resistance is not surpassed to the upside, we will still maintain our intraday trend bearish bias for the dollar yen. Right, so that sum up the intraday technical outlook on the major dollar pair. So now let us turn our attention to the major stock indices, starting with the Hong Kong 33. So we know that the Hong Kong 33 today is have a very lackluster movement because of that Trump 115% tariff, higher 50% tariff, baseline tariff for 150 days. And also there's this news flow that I forgot to highlight, is that in early Asia session time, this guy, very important appointment for the ongoing US-China trade talks negotiation, which is Scott Bassett, US Treasury Secretary Scott Bassett mentioned that US-China trade talks has stalled at this moment, and the only way to break this ice is for a one-on-one call between President Trump and China President Xi. And because of this negative news flow, that also create a bit of negative feedback loop on the Hang Seng Index, which is currently still down by negative 1.45% on the cash market. But what's interesting over here is that we start to see some form of hesitation by the bears to push the price lower below the 20-day moving average. Okay, it still managed to hold above the 20-day moving average, I think, as a support at around 23,150 level, 2315. And also in the last hour, it managed to shape a bullish hammer candlestick, all right, at the 10 a.m. hour mark, all right, over here. So it also came in very close to that swing low, the minor swing low that kickstart the last rally, hitting our resistance yesterday during the Asia session at 23,600. So over here, before it shaped that pullback, and also this bullish hammer that's being formed at the 20-day moving average also managed to actually stop at this minor gap up that's being seen on last week as well. All right, so no change, given the fact that the price action is telling us that there is no clear sign of bearish pressure after this initial intraday weakness due to negative news flow that has taken shape. So this could be just a minor corrective decline where it managed to stall at several key technical elements. We will still maintain our intraday trend bullish bias for the Hong Kong 33, using a slightly adjusted upward pivotal support at 23,040 for now. All right, over here. First, resistance level to watch on an intraday basis, given that this is Friday. So I'll use a slightly this level here, okay, which is 23,395. 23,395. All right, which is so close to yesterday's Asia US session high as well, and this former congestion area of last Tuesday, 27 this Tuesday and this Wednesday. Okay, 23,395, above 23,395. See a retest of yesterday's Asia session high at 23,600. Only a sudden push down and hourly close below 23,040, then that would invalidate today's intraday trend bullish bias to kickstart a minor corrective decline to revisit the next near-term support level at 22,680, with so confluence with the 50-day moving average. So i.e., in a nutshell, still maintaining our intraday trend bullish bias, using a slightly adjusted upward pivotal support at 23,040 on the Hong Kong 33, representing the Hang Seng Index. Next will be the Japan 225, representing the Nikkei 225. So the Japan 225 reintegrate back below the 200-day moving average, but still managed to hold above the 20-day moving average as we are speaking right now. So there could be some form of a minor congestion or minor consolidation that has taken shape after the rally that's been seen on last Friday. All right, so we will flip to a neutrality stance for today, rather between a tight range between the 200-day moving average and the 20-day moving average. Upper limit of the neutrality range will be 37,980. Lower limit of the neutrality range will be at 37,610. That means trading within this sideways range configuration. Only a bullish breakout and an hourly close above 37,980, then that would validate our bullish buyer stance on the Japan 225, representing a Nikkei 225, to re-expose or retest this week high, which is this Thursday high at 38,460 next. All right, so keeping to a neutrality stance for now between 37,980 because of a reintegration back below the 200-day moving average, but still holding above the 20-day moving average at 37,610. So only watching very closely the upper limit for a clear bullish breakout of hourly close above 37,980, then that would validate back again our honors back to the bullish stance of the story for the Japan 225. Next up will be the Germany 30, representing the German DAX. So the Germany 30 yesterday during the European session, at the start of the European session, it can't maintain its momentum and starts to drift downwards and retest the low of this Monday at 23,895, but still holding above the 20-day moving average at 23,675 over here. And the hourly RSI now has starts to inch upwards after hitting the oversold level yesterday, right? Shaping a series of higher low as well. Okay, higher low, so indicating that there is some form of bullish momentum that could creep back into the Germany 30. All right, so with this positive showing on the hourly RSI, we will still maintain our intraday trend bullish bias despite yesterday's sell-off during the European session, but it stopped exactly at the support level at 23,895, which is our pivotal support. So I will use a slightly lower pivotal support for today. Don't want just in case of any whipsaw during the opening European session at 23,895. Adjust it downward lower to 23,675, which is so confluence with the 20-day moving average as well. First resistance you got to surpass for today will be at 24,125. That's our first resistance level to watch. 24,125. Okay, above 24,125 potentially sees the next intermediate resistance zone coming in at 24,440/560, which is the Fibo extension clustering level. Only a push down and hourly bearish breakdown and hourly close below 23,675 that would invalidate today's intraday trend bullish bias. No more recovery, and instead it will start to shape a continuation of this corrective pullback sequence to revisit the last Friday low at 23,380. So that's for the Germany 30, using a slightly adjusted downwards pivotal support to prevent any whipsaw, which is also close to the rising 20-day moving average at 23,675 to maintain our intraday trend bullish bias. But upside trigger level, the price action got to break on the upside to increase the odds of another round of fresh impulsive up move. The key intermediate resistance level to watch will be 24,125. All right, so that's for the Germany 30. Next up, major US stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So the Dow Jones Industrial Average did a kind of a whipsaw yesterday. So what it did over here is that initially at the start of the US session, it plummeted all the way down. Then after plummeting all the way down, it managed to survive at the rising 20-day moving average, which is so the minor swing low of this Tuesday, before shaping a slight V-shaped recovery over here. So using adjusted pivotal support level, which is for sure yesterday's minor swing low at the 20-day moving average, where it managed to stage the bounce, 41,850. Short-term pivotal resistance, short-term pivotal support level, pardon me, on the US Wall Street 30, still maintain the intraday trend bullish bias, but upside trigger level, you got to break out pretty much fast for today to kind of increase the honors for this bullish bias to play out throughout the US session will be 42,440. That means that's also the reintegration back above the 200-day moving average. So right above 42,440, open up scope to consider the next near-term intermediate resistance level coming in at 42,870 slash 43,085. Only a push down and hourly close below 41,850 that would negate today's intraday trend bullish bias to see a further slide towards the next support at 41,530, which is the medium term ascending channel support that I drew from the low of 7th of April this year. However, a breakdown below 41,530 will see a deeper corrective pullback to retest the 50-day moving average, confluencing with the next near-term support level at 41,135, which is the minor swing low of 23rd of May and 9th of May. So i.e. in a nutshell, using the 20-day moving average as my pivotal support level for today, which is at 41,850, we'll still maintain the intraday bullish bias stance on the US Wall Street 30 for a potential recovery today. Upside trigger level to watch will be 42,440. Lastly will be the Nasdaq 100 over here. So the Nasdaq 100, after hitting that 21,750, it can't maintain that momentum and so stage that pullback. So that pullback itself over here hit our pivotal support level before stalling on that sell off right at this point in time. And what you could see over here is that the hourly RSI has starts to shape a small bullish divergence. Okay, a higher low over here, whereas price action shape a lower low. Okay, so no change, 21,220. So that will be my short-term pivotal support level. We saw confluence with the medium-term ascending trend line that I drew from the low of 7th of April. Oops. Okay, this year. Okay, 7th of April. All right. Okay, so this is the Nasdaq 100. Okay, so upside trigger level will be this 21,500. Okay, to potentially revisit 21,750. However, a bearish breakdown with an hourly close below 21,220 that would invalidate today's intraday trend bullish bias and as well as the recovery scenario to see a deeper corrective pullback exposing 21,015, which is close to the rising 20-day moving average. Below 21,015 may revisit this last Friday minor swing low at 20,690. So i.e. in a nutshell, I'll be watching very closely 21,220 as my short-term pivotal support level for a potential recovery scenario or bullish bias for the Nasdaq 100. Upside trigger level 21,500. So that's for the Nasdaq 100. All right. Next up, commodities asset classes, starting with gold XAU/USD. So for gold XAU/USD, what do I mean is that 33.28 still quite crucial as for the boost to gain traction. So yesterday is the second time where it tested during the US session, can't break before shipping that minor pullback as we see throughout today's early Asia morning session, and now revisiting the 20-day moving average, which is the 32.90 level. All right, so since it can't have a proper bullish breakout above 33.28, so that's our first resistance in our bullish recovery bias scenario yesterday. We will not adjust any major levels in terms on the support. So support is indeed still 32.52, where it managed to shape that V-shaped recovery yesterday, but can't break above our first resistance level at 32.28. So with that, I'll be still watching 32.52 as my short-term pivotal support level, still using this level to maintain my intraday trend bullish bias on the gold XAU/USD. Upside trigger level will be 33.28 for sure. Only a breakout and hourly close above 33.28, then potentially the bulls may gain more traction to revisit 33.70 next. Only, however, a bearish breakdown and hourly close below 32.52, that would trigger off a further slide to revisit the 50-day moving average at 32.20/32040. So upon hitting this level here, I'll be so on the lookout for bullish reversal candlestick for another potential chance of a minor recovery today as well. Only a breakdown below 32.04, then that would trigger off another deeper slide on the intraday visit to test the medium-term ascending trend line support, drawing from the low of 31st of December 2024 last year at 31.63. We saw confluence with the minor swing low of 16th of May. All right, so key levels on the to maintain that bullish bias still remains unchanged. Key support level at 32.52 on the intraday basis. Upside trigger level 33.28 for gold XAU/USD. Lastly will be the West Texas crude oil. So West Texas crude oil, it rejected off the 64.06 short-term pivotal resistance level, which is so the 50-day moving average hit, then shaped that inverted V-shaped sell-off, and right now is breaking below the 20-day moving average, looking to have a test at our support at 60.35. So still no change. We still maintain that bearish bias on the West Texas crude oil as it continues to trade within this kind of a symmetrical triangle range configuration depicted by this purple line over here, this purple converging line, which is the upper boundary. You could see on my screen, and this lower line here is the lower boundary of this symmetrical triangle range. So since it got rejected one time, two times, twice so far at the upper limit of this symmetrical triangle range resistance level, potentially now back below the 20-day moving average, it could drift down lower towards the lower limit of this symmetrical triangle range. So after a breakdown below 60.35, potentially it may expose the next near-term support at 58 next over here. So still maintaining our intraday trend bearish bias using 64.06 as my short-term pivotal resistance on the West Texas crude oil. Only a bullish breakout and hourly close above 64.06 that would invalidate today's intraday trend bearish bias to kickstart a corrective rebound sequence, exposing the near-term support in first step, the next near-term resistance in first step, pardon me, at 65.40. Above 65.40 sees 67.35 coming in next. Okay, so that sum up the intraday technical outlook on the West Texas oil, and as well as the broad-based cross asset classes that we covered earlier. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for in the rest of today's Asia late Asia session and early European session, and as well as the US session today. So for today's European session, things to look out for potentially at 2 p.m. we have Germany retail sales, year-on-year retail sales for the month of April. So that could potentially influence the euro dollar, the euro crosses, and as well as the Germany 30. Then we have this Germany inflation rate as well, the core inflation rate out at 8 p.m. flash figure for the month of May. So that could potentially impact the so-called the euro, the Germany 30, the euro dollar and the euro crosses. And those who are monitoring dollar Canada and the Canada crosses pair will be a Q1 Canada GDP out at 8:30 p.m. Singapore time. And thereafter, this is the all-important core PCE price index, where is one of the important economic metrics that the Fed monitor for inflationary trend in the US. So for core PCE price index, month-on-month, market is expecting a slight upward tick to 0.1% month-on-month from 0%. However, on a year-on-year basis, the core PCE price index on a year-on-year basis, market is expecting a 2% basis point drop. From one basis point drop. That means from previously 2.6% month-on-month for the month of March. For April, now they're expecting it to dip down slightly lower to 2.5%. So that could potentially influence the almost all key asset classes, because this is a kind of key inflation metrics that the Fed tends to monitor in their making of their monetary policy decision. So then thereafter will be a quiet session. 12:20 a.m. we have Fed Bostic speaking. 7:30 a.m. early Singapore time on Saturday, Fed Goolsbee. And nevertheless, we have tier 1 China data out on Saturday, 9:30 a.m., which is the MBS, the state compound manufacturing PMI and non-manufacturing PMI for the month of May. So that could potentially also influence the movement on the Hong Kong 33 index on Monday when the market is open. And do not forget, on Saturday we have this OPEC Plus meeting as well. So market potentially will be looking out for signs of further production hike, not cut, further production hike means oil production increase among the OPEC Plus member, and that could potentially also see further negative feedback loop into the oil prices when the market reopen on Monday. All right, so that are the key data to look out for. So I wish you all a happy Friday, a great and restful weekend, and we shall speak again on Monday. This is Kelvin here, signing off.